What's up, rock stars? It's Mighty Mike, and welcome to home studio. All right, so for the foreseeable future, I'm going to be recording from my house. This is my bedroom, so I hope you guys don't mind. But Orange County went into complete lockdown. And if you're not an essential employee, you're not allowed to go outside. You can go shopping for groceries, you can go exercising, go for a walk, things of that nature. But essentially, they want to keep people off the streets. They don't want people in large crowds, and they want to stem the tide of the COVID-19 from spreading around and killing everybody. All right, so I kind of want to give you guys an update about what's going on in the housing market. Pretty much nothing. Apparently, there was a virus that just took a whole dump on the economy, so we're just kind of sitting here on our hands, twiddling our thumbs, doing absolutely nothing. So what does that mean for you guys? If you're a buyer, you pretty much you're not doing anything right now. You can't go see houses. You can't do anything when it comes to buying. You can get pre-approved for a mortgage. Well, that's the other side of the equation. The Federal Reserve just dropped the interest rate down to zero, at least for the overnight rate when it comes to banks loaning money to each other. But for you guys, in times like this, typically whenever the economy takes a dump, stock market investors like to take their money out of stocks and put them into bonds, and that usually puts pressure on the price, and that pushes that down. But the problem is a lot of people are pulling their money out of the stock market right now, and they are staying essentially liquid. They're not putting their money into gold. They're not putting their money into bonds. So right now, the average interest rate is 3.65%. That's what the banks get to lend it out. But when it comes to you, as far as like what your points are going to be or your interest is going to be, it's probably going to be in the range of like 5 to 5.25. And the reason why is a lot of banks right now are unsure about what's going to happen with the economy. So they're kind of just like pushing up that pad there so they can make more money because they just don't know what's going to happen. Too many people are being laid off right now. Too many people are, don't have enough money to carry themselves over while they get laid over. So that's the other thing I want to talk to you guys about. This channel has been primarily about real estate, about me essentially pushing my career, trying to, advertise on stuff like this. I want to focus more on education. I want to focus more on financial literacy, financial independence, teaching people how to invest, keeping them up to date, all that good stuff. If it wasn't for real estate or any other thing I've ever done in my life, financial advising would be like my dream job. Unfortunately, you need a 4-year degree to do that, so the next best thing is a YouTube channel. Now, keep in mind that I am not a financial advisor, not a CPA, not a tax accountant. Don't take my advice. Take it with a grain of salt. Make sure you do your own research, get your own experts out there to help you, guide you through the whole process of when it comes to investing. This is mainly just educational. All right, now that the legalese are out the way, one of the things you guys have to keep in mind when you're watching the news and the news sitting there just pumping COVID-19, economy destroying, bad orange man, Trump, keep in mind that is their business model. Fear mongering is how they keep you on TV, looking at, eyes on screen, eyes on their websites, clicking and generating revenue for themselves. If they sat there and was trying to be reasonable about stuff, they wouldn't make money. They make money by keeping you scared. So keep in mind that when you hear stuff from the news, take it with a grain of salt as well. So one of the things I want to start talking about is financial independence and what's going to be happening with the stock market as we're going forward. And I'm going to be advising you guys to do some things that you may think like, well, Mikey, like that's crazy. Well, so one of the things I want you guys to keep your eyes on is where the stock market is going to go. Historically, when you look at the trend line of how the stock market was doing, it has always gone up, even through like the worst times, through the recessions, through the depressions, through the wars, through the famines, whatever you want to call it. The stock market has always gone up. It has always been a kind of a measure of the U.S. economy and how it's doing. Now, a lot of people sit there like, oh, betting on the U.S. economy is dangerous. It is. It has its risk. Investing into anything can cause issues. Don't invest any money that you're not willing to lose. You would probably have bigger concerns than your money being lost. You would probably be looking for food and shelter and probably bartering with AAA batteries. Oh yeah, pro tip, go out there and buy some AA batteries because they will probably make good currency in the Stone Age economy we will have if the economy does take a tank. The reason why I want you guys to think about the stock market is because right now everything is on discount. There's going to be people out there who are going to make a ton of money because they are financially literate. They know what they're doing. They have educated themselves, and they've done research, reflected on that, and then they created algorithms and protocols for themselves in order to invest in the future for themselves to make a ton of money. The problem with your average baseline American is that they haven't done that, and they're listening to really bad advice from really bad sources that are not really concerned with their wealth or well-being, mainly the media. If you want to achieve financial independence, you want to be free from the rat race of working a job, you don't want to have to see about it. This is a thing that I've always kind of brought up to the point of nauseum. Like, I've annoyed a lot of people in my life about this. The whole idea of like financial independence, being free from, worrying about having a job. Well, now you see why. Everybody's sitting there trying to wait for the government to come through with a package for $1,000. Guys, $1,000 isn't a whole lot of money. So please don't freak out over $1,000, and don't be willing to give up your liberties and your freedoms over $1,000 paycheck that's going to last you like 2 weeks. All right, with that said, we are in Black Friday mode when it comes to the stock market. There's some good stocks out there that you can purchase into, and the way that you should definitely do it is, just so you don't just dump a ton of money into the, market right now and lose it because it was still going down. But you want to play around with it. You want to do like step by step. If you have $1,000 of discretionary money that you can spend right now or invest, only do like 100 at a time or maybe 200 at a time, and do it maybe between a week to a couple of days. But keep your eye on the ball. You want to go ahead and invest money into the stock market, because right now you can be buying a lot of good companies on a discount, and that can build you significant wealth in the future. These downturns, in the business cycle, and typically the business cycle is every 7 to 10 years, we have this, influx of cash, money that goes into the wrong investments, and it creates this bubble, and then the bubble pops. Well, COVID-19 is one of those, one of those moments where the straw broke the camel's back. So you want to be checking on the stock market, definitely investing in stuff. You can use apps like Betterment.com. You can use Acorn. There's a bunch of them out there. There's personalcapital.org. Or you can even go to Vanguard or Fidelity in order to start your own brokerage accounts, and you can start investing into index funds or ETFs, which are exchange traded funds. And index fund is essentially, like, not to go into the technical terms, but essentially think of it as like a basket, and you put every stock in there that's part of this index, and you essentially invest in all these companies. So there's a couple of them out there. You have the U.S. Total Stock Exchange, which essentially buys stock from all the U.S. companies on the stock exchange, which is about 2,400 around there. And it's basically hedging your bets that the economy is going to do well, these companies are going to do well, and then when a company does bad, they kick it out and they throw a new one in there. So your investment keeps growing over time. So if you want a beginner's way of investing without the trouble sitting there trying to do, put options and, trying to learn all those things and blah, 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 definitely you want to check out index funds or ETFs, or you can even go to like the robo-investors like Betterment.com or Acorn and let them do the investing for you. Mutual funds, which essentially the traditional brokerage way of trading stocks. Essentially, you have a paid manager that sits there and does this on your behalf. The issue with that is they tend to be a little more expensive. I mean, a whole lot more expensive. And they tend to be a whole lot less effective than just simply index funds. So always think of investing in the stock market as this long-term game that you're playing. You don't ever want to sit there and think that this is a quick cash, quick way to win. That's where you're gambling in the stock market, and that's where you can tend to lose the seat of your cushion by gambling. Remember, investing has its risk, it has all its issues. So the last thing you want to do is invest money that you don't want to lose, or if you're sitting there and you need to spend money you need to put money into the refrigerator and not into your portfolio. All right, so with that said, here's the bottom line with this whole situation that's going on. The government is trying to come up with a bailout package. Everybody's going to pretty much get about $1,200 if you make below $75,000. If you're single, I think it's $2,400 if you make $150,000 at that point. Is that a whole lot of money? Is that going to help you out? For some people, yes. For a whole lot of other people, probably not. So the key here is not to be reliant on the government. That check will come or won't come, whatever. This is now our time to sit there and start investing, looking for opportunities to take advantage of this situation, to make a profitable future for ourselves. And going forward, this is what this channel, at least I want this channel to be about. not just real estate investing, but also investing in stock markets, becoming financially independent, all that good stuff. I want to talk about that. So if you guys have any questions whatsoever when it comes to investing, when it comes to real estate, go ahead and leave them in the comments down below. I made a couple of videos so far in regards to your comments that I've gotten from other people. So don't be afraid to hit me up. If it wasn't for real estate, I'd probably be a financial advisor. I love getting into this, talk about that stuff, all this information. And keep in mind, I'm a beginner as well. I'm learning all this information. A lot of this stuff that I'm telling you guys, I've learned over the past year or two, going into research, reading books, watching YouTube videos, all that good stuff. Hey, YouTube University degree is legit. So if you guys would do me a huge favor, go ahead and hit that subscribe button and like, and more importantly, please share this with your friends and family members. Going forward, this is going to be a very educational channel when it comes to financial literacy, and I want you guys to be prepared, be armed. I want you to see what the invisible hand is doing behind the curtain, which is typically the government, and we're going to be talking about that, going deeper into it in the future. So if you guys are interested and down for that, go ahead and hit that subscribe button. Guys, I appreciate you watching so much, and I know I create a billion videos and all that good stuff like that, but much appreciated for all the comments and the love, all the support that I get from you guys for doing this. Rockstars, have a good one, and I'll see you guys in the next video.